We're joined by Stan Shamu from IG in Melbourne. Stan, good to see you there. Yeah, what did you think of Ben Bernanke's congressional testimony?
It seems to have found the right balance this time round. I think he's probably been practicing after the first couple of comments he's made recently have come out, and it resulted in a certain direction for investors. But overnight, it seems like he really did strike the balance. He managed to keep the doves and the hawks at bay, with the price action in most of the currency pairs relatively neutral. Of course, what caught people's eye in the first place was the fact that asset purchases were not on a preset course, and of course they were subject to getting adjusted as and if the need be or if the need arise due to different or improving economic conditions. I think it certainly does seem like he's really now made his point clear. Of course, going forward, they will continue to assess various economic readings, not just from a jobs perspective, but also inflation, growth. And of course, just going forward, it seems he even said if things don't improve, then there is a possibility that they could even increase asset purchases as well. And of course, the fact that even if they do look at tapering, it doesn't necessarily mean that they will start to tighten. Tightening is still a long way off, and we can expect interest rates to remain near zero for a while. So he really did strike the balance. He did also reiterate the fact that there is still a strong possibility of tapering off by the end of the year and completely ending asset purchases next year. So I think investors don't quite know exactly which direction to take. The US dollar did lose some ground following the testimony, but after his Q&A session, it seemed like it came back up a little bit. As a result, there has been some very choppy trade in most of the major currency pairs. The only real big mover was the pound against the US dollar, but that was more related to that was more due to UK-related news, with the BOE minutes coming out and causing a sharp reversal higher in the pound versus the US dollar. Of course, a lot of analysts were expecting that the recent decision from the BOE meeting was on the back of a 7-2 vote to keep rates the same, but it came out 9-0. And that really did help the bulls on the pound and pushed it higher. As well, we had some pretty good jobs numbers out of the UK, which helped sentiment there.
Just in terms of the Aussie-US cross then, what was your thinking in terms of the way it traded last night, sort of holding around that sort of 94.3 mark right now?
Yeah, it actually topped out at about 93, so just shy of that 93 level. We still firmly believe that the resistance is in that 93 to 93.20 level, so it will be one of those levels that might result in renewed selling for the Aussie dollar. Of course, at the moment, it seems relatively positive. I think the risk space is quite content with Bernanke's comments, and they're not quite willing to sell risk at the moment, considering that Bernanke did emphasize that he would be happy to increase the size of asset purchases should the rate should the economic conditions not improve in the way he wants them to. With that in mind, it certainly seems like the Aussie will be supported in the near term, but we still feel around that 93 level presents significant resistance that might see the sellers start to come back into the market. Today, of course, we've got the NAB quarterly business confidence reading, and of course the conference board's leading index reading as well. So that might be a bit of a source of volatility for the Aussie dollar locally.
Yeah, and just apologies, I think I said 94.3 there, obviously I'm at 92.3. Stan, just looking at the opening call then for the local market, what's your thinking?
We're currently calling it up 0.5% to 5,004. So that's a fairly solid gain, but of course we will continue to have some of these production numbers in focus. I think Rio and BHP both had a fairly good session in the UK, so that should be quite good for the local for their local names. Of course, BHP's ADR is currently pointing to a 0.5% gain, so they should be quite well supported. Most of the analysts are quite happy with BHP and Rio's production numbers. They certainly seem to have turned a corner with iron ore production and copper as well. Of course, with BHP, crude oil slightly disappointed, but I think a lot of analysts are still quite happy with the progress that the miner has made over the past 3 months or so. And of course, just looking ahead, I think that their capital expenditure initiatives are really starting to pay dividends as well, and analysts feel that these will help with profitability going forward. Today we've got Woodside's second quarter production report, but of course the oil company has already come out with a bit of a downgrade. I think their initial full-year guidance was from 89 to 94 million barrels of oil equivalent, and now it's 85 to 89. So it looks like, I think, a lot of analysts feel they will be sort of within this guidance. As long as they are on the right track with the run rate to get to this guidance, I think the market will be relatively content with the report. But should they announce further problems with some of their operations, then it could be a problem, and we could see Woodside sold off today.
Stan, thank you as always. Stan Shamu there.
Cheers,
from IG. So as Stan was saying, a choppy night for currency markets. 92.3 the read on the Aussie right now. Did go close to that 93-point mark, and that off the low of the session of around 92. Let's get some more analysis now on those currency markets. And Stephen Dooley joins us from Forex CT from our Melbourne studios. Stephen, good to see you there. Yeah, what was your take on Ben